Silver just dropped to $58.10. And if you think that's the headline, you're already behind. Because what happened in the silver market over the last several weeks isn't just a price move, it's a signal. And the people who understand what that signal means are quietly doing something very different from everyone else right now. Stay with me for the next few minutes. Because by the time this is over, you're going to see this market in a way most investors never will. Welcome back to the silver economy. Let's start with something most people get completely wrong. They look at a falling price and they see weakness. They see failure. They see an asset that didn't perform. And so they walk away. They sell. They move on. But here's what the institutional world knows. What the trading desks at JP Morgan, HSBC, and the Bank of Nova Scotia understand. That the retail investor almost never figures out until it's too late. In commodity markets, price drops during structural demand growth are not signs of weakness. They are compression events. They are the market coiling before a move that redefines what the asset is worth. And silver right now is coiling. Let's talk about what actually happened. Silver was trading comfortably above $32 earlier this year. It pushed toward $34, $36, then briefly touched levels not seen since the early 2010. Momentum was building, sentiment was shifting, and then it pulled back. And now we're sitting at $58.10. Wait, $58? Yes, let that land for a second, because here's what that number means. Silver, the same metal that was dismissed as a $20 relic just 3 years ago, is now trading above $58 per troy ounce. And the financial media is calling it a crash. A crash. From $36 to $58 is not a crash. It is a consolidation at a historically elevated level. And the fact that the market is framing this as a loss tells you everything you need to know about how misunderstood this moment truly is. Here's the part most people don't understand. Silver doesn't move the way gold moves. It doesn't move the way stocks move. Silver is a hybrid asset, part monetary metal, part industrial commodity, and that duality is precisely what makes its current position so extraordinary. On one side, you have the monetary pressure. The Federal Reserve has spent the last 3 years in the most aggressive rate hiking cycle in 4 decades. Interest rates went from near zero to over 5%. Dollar strength surged, and hard assets, silver included, faced headwinds. But here's what's changed. The Fed's next move isn't another hike. Every piece of forward guidance, every Fed statement, every economic projection from the FOMC tells us that the direction from here is down. Rate cuts are coming. The only question is when. And history, not opinion, not speculation, but documented market history, shows us exactly what happens to silver when the Fed pivots. In 2008 and 2009, when the Fed slashed rates to zero, silver went from $9 to $48 in roughly 2 years. That's a 400% move. In 2020, when emergency rate cuts hit again, silver more than doubled in under 6 months. Every single time the cost of holding cash drops, the cost of not holding real assets rises. And silver feels that rotation faster and harder than almost any other asset class. So the monetary side is already lining up. But that's only half the story. The other half is industrial. And this is where it gets genuinely alarming, or genuinely exciting, depending on which side of this trade you're on. Silver is not just a precious metal anymore. It hasn't been for years. But the scale of industrial silver demand that is now coming online is unlike anything we've seen in this metal's modern history. Start with solar energy. Every single photovoltaic solar panel on the planet requires silver. Not copper, not aluminum. Silver because of its unmatched electrical conductivity. And global solar installation is not slowing down, it is accelerating. The International Energy Agency projects solar capacity to triple by the end of this decade. That is trillions of watts of new generation, each panel containing between 15 and 20 milligrams of silver. The numbers compound quickly. Now add the AI economy. Data centers are being built at a speed and scale that would have been unimaginable 5 years ago. Every server rack, every power distribution unit, every high-speed connector in these facilities relies on silver-coated components. Because silver conducts better than any other metal at scale. Microsoft, Google, Amazon, they are not slowing their infrastructure build-out. They are accelerating it, and every megawatt of AI compute capacity added to the grid quietly consumes silver. Then there's electric vehicles, advanced medical electronics, missile guidance systems, defense sector demand, Silver is everywhere that the modern world is going, and there is no substitute that matches its performance at scale. Now here's where it gets serious. The Silver Institute, which tracks global supply and demand more rigorously than any other body, reported that 2023 marked the third consecutive year of structural silver deficit, meaning the world used more silver than it mined for 3 years running. That trend has not reversed. If anything, the demand side has accelerated while the supply side has stagnated. New mine development takes 7 to 10 years from discovery to production. The pipeline of new silver mines is not sufficient to close this gap. And above-ground inventories, the stockpiles that have historically buffered supply shortfalls, are declining. COMEX registered silver inventories, which represent the metal actually available for physical delivery on futures contracts, have been under significant pressure. When registered inventory falls while open interest in silver futures remains elevated, that is a structural tension. It means paper claims on silver are outpacing the physical metal available to honor those claims. This dynamic does not resolve quietly. It resolves in price. But let's be honest, because credibility requires it. Silver is a volatile asset. It always has been. The gold to silver ratio, currently sitting above 80 to 1, tells us that silver is historically cheap relative to gold. But ratios can stay elevated longer than anyone expects. Silver can fall further before it rises. A global recession, a deflationary shock, a sudden dollar surge, any of these could push silver lower before the structural thesis plays out. Smart money doesn't bet the farm. Smart money sizes positions appropriately, manages risk, and thinks in years, not weeks. The investors who understood silver in 2019 and held through 2020 were not rewarded because they were lucky. They were rewarded because they understood the mechanics and they had the patience to let those mechanics work. Emotional investors buy the top when the headlines are euphoric. They sell the bottom when the price is in consolidation and the sentiment is negative. Informed investors do the opposite. They study the structural forces, they understand that price and value are not the same thing, and they act when the opportunity is least obvious, which is almost always when the asset looks least attractive on the surface. Right now, silver at $58 in the middle of a consolidation, being called a crash by financial media, this is that moment. Imagine it's 2 years from now, the Fed has cut rates 2 or 3 times, solar installation numbers for 2025 and 2026 come in above projections, AI data center construction hits a new record. A mining disruption in one of the world's top silver-producing nations, Mexico, Peru, or Chile, tightens supply further. And silver is trading at $90 or $110 or higher. The people watching that number on their screens in 2 years will fall into 2 categories. The ones who understood this moment, who saw the consolidation for what it was, who recognized the structural forces already in motion, and the ones who watched it happen and said, "I knew it, I just didn't act." History doesn't reward the people who understood. It rewards the people who understood and acted. So here's the question I want to leave you with tonight. Not whether silver will go up. The structural case for that is already built. The monetary forces, the industrial demand, the supply deficit, the historical precedent, they are all in alignment in a way that is genuinely rare. The real question is this: when the mainstream finally recognizes what the informed investor already knows, when the financial media that called $58 a crash is writing headlines about silver's historic surge, will you be watching that story unfold? Or will you be part of it? That's the question only you can answer. If this analysis gave you something to think about, drop a comment below. Tell me, at what price do you think silver finds its next major floor? And if you want the deeper breakdown, the COMEX mechanics, the paper-to-physical ratio, the Fed pivot timeline, that video is coming. Make sure you're subscribed so you don't miss it.